What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is SNAP, Snap. This finishes at $7.76 today. That is down 28.08%.
And it's gone.
So we haven't analyzed Snap in a while here, probably in a few months. And I'm pretty sure the last time we talked about the stock was during the last earnings. So for the past year, this stock has been getting absolutely wrecked. Down from the high of 83 all the way at 7 now. So very significant pullback, which is not too surprising because Snap is falling behind other social media sites now, and it is a meme stock. There was a reason as to why the stock went down so much today. Yesterday in the aftermarket, the company had earnings. And then we also have a bunch of price adjustments. So let's check that out. So EPS was 8 cents, which beat the estimate of -1 cent. So that was a huge beat on EPS. And revenue was 1.13 billion, which missed the estimate of 1.14 billion. Slight revenue miss. So overall, these earnings are pretty good. Revenue could have been better, but not bad at all. But I think what the market really cared about was the guidance. That was the big problem. Snap did not issue guidance for the next quarter. So very bearish there. And they also said that content consumption is down 5% in the US in the past year, which definitely doesn't help them. And today we're getting a bunch of price adjustments. We got Barclays at 18, Bank of America 11, Credit Suisse 17, Jefferies 12, JP Morgan 8, Rosenblatt 8, Goldman Sachs 10, Evercore 14, Morgan Stanley 7, Citi 9, Truist 10, Deutsche 9, Susquehanna 8, RBC 8, Stifel 9, UBS 10, Canaccord 12, Piper Sandler 9, MKM 10, and Bernstein 9. So we have a pretty wide range of price targets here. On the lower end, we have $7, and on the higher end, we have $18. But for the most part, the hedge funds seem to think that the stock is worth more than it's currently at. So it appears like today a lot of institutions pulling their money. So the stock keeps on going down, but the chart is starting to look really bullish, which we'll get to in a second here. This was number 2 on StockTwits today, after SPY. Had over 6,500 mentions, so once again, we're going to analyze it. All right, let's jump right in. Let's go ahead and analyze here. So first of all, we have a cup and handle in the making. Can't really say where the bottom of the cup is because this is making lower lows, but there can be multiple possible tops. It can be 1130, 1185, or 1265. And longer term, this is part of an even bigger cup and handle where this has the potential to go all the way back up to the high of $83. Although I do believe the most realistic tops would be 1130 or 1180. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. We also have an inverse head and shoulders forming here. Back at around $10 and $11 was where the first shoulder formed. Today, after the sell-off, the head is forming. So all that's left is the second shoulder to form, and that would be a bullish indicator that is telling us that the stock may break out to the upside. And then we do have multiple gap downs. The first gap down was created today, back at 1060. So that's a bullish indicator that is telling us that the stock should come back up to 1060 to fill this gap. Second gap down was back at 1245. So another bullish indicator that is telling us that the stock should come back up to 1245 to fill this gap. The third gap down was back at 1545. So another bullish indicator that is telling us that the stock should come back up to 1545 to fill this gap. Another one at 2170. So another bullish indicator that is telling us that the stock should come back up to 2170 to fill this gap. Another one back at 3780. So another bullish indicator that is telling us that the stock should come back up to 3780 to fill this gap. Another one back at 42. So another bullish indicator that is telling us that the stock should come back up to 42 to fill this gap. And the last one is back at 7390. So another bullish indicator that is telling us that the stock may come back up to 7390 to fill that gap. Although, honestly, that's probably not going to happen. So 7 gap downs, extremely bullish there. The MACD, the moving average convergence divergence, is currently at 29. So this is officially in oversold and undervalued territory. So the RSI is currently a bullish indicator that is telling us that the current price of 776 should be a lot higher. And on the MACD, the moving average convergence divergence, the MACD line has crossed the signal line to the downside. So that's a bearish indicator that is telling us that it may be time to sell. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 790 and 735. So if this goes to the upside, next levels of resistance would be 790, 905, 950, 990, 1020, 1060, 1085, 1120, 1150, 1180, 1220, 1245, 1280, 1310, 1360, 1405, 1440, 1485, 1515, 1550, 1635, 1710, 18, 1935, and then 2050. There is resistance above 2050, but we're not going to discuss that right now. And if this goes to the downside, next level of support would be 735. There's no support below 735. That would be uncharted territory. So right now at the current price, 776, the channels to the upside and the downside are very wide, so expect significant price action either way this goes. However, if/when this breaks 905 to the upside, the channel starts to narrow, so expect a significant decrease in price action if/when this breaks 905 to the upside. But then after this breaks 1550 to the upside, the channel starts to open up and get wide again. So expect a significant increase in price action if/when this breaks 1550 to the upside. And this did 244 million in volume today. Very significant volume, way above the average of 33 million. So the sell-off today was confirmed by the volume. Okay, guys, just my opinion, not financial advice. So again, it's been a really rough year for this stock. It just keeps making lower lows, and the sell-off really seems like an overreaction. This doesn't really make any sense, because the earnings were pretty good, and the hedge funds think that the stock is worth more. The only bad thing was not having guidance, but that does not justify a 28% sell-off. We have way more bullish indicators than bearish indicators right now. Again, we have bullish indicators in the cup and handle, inverse head and shoulders, multiple gap downs, and RSI. And again, we have a bearish indicator in the MACD. So technically, based on the chart here, the stock looks really bullish in the short and long terms. So therefore, if you want to go along, not financial advice, this looks like an excellent entry to me. Again, oversold, undervalued, all-time low. The hedge funds think it's worth more. A lot of bullish indicators. So in the short term, this can realistically come back up to 1245 to fill the gap there. And from the current price of 776, that would be about a 60% upside potential. And it's pretty hard to tell how low this may go because we are getting into uncharted territory. But this really shouldn't go too much lower. It's gotten beaten down so much already, and it looks like it's due for a reversal. So I would say going along at the current price, 776 would be a low risk, high reward play. Definitely worth a shot in my opinion. You really can't go too wrong here. A lot of upside potential, not too much more downside potential. And in the longer term, it has way more upside potential. So I can support going long at the current price, 776. And if it pulls back, then you can just average down. Now, if you want to go short now, financial advice, I would not do that, and I would not recommend that. For all the same reasons that going long is a good play right now, going short is a pretty bad play. Again, a lot of bullish indicators, oversold, undervalued, all-time low. Hedge funds are bullish. You could have went short anywhere, literally from $80 to $10, and here at 776, it's a bit too late to go short. You missed your chance, and going short now would probably result in you getting burned. Again, in the short term, this may come back up to 1245, which would be about a 60% upside potential. And again, in the short term, this really shouldn't go too much further to the downside. So I would say going short at the current price, 776 would be a high risk, low reward play. Not worth it in my opinion. Doesn't make any sense. You'd be shorting for crumbs here and exposing yourself to a massive amount of upside risk. So if you want to go short, please do that at your own risk, but I really don't see why you'd go short here. So I don't like the current entry of 776 on the short side, but I will say if any of these gaps get filled, all of them would be some pretty decent entries to enter short. So in summary, guys, pretty good earnings, but it didn't matter. The stock is getting wrecked today and all year, but this looks like a good buying opportunity. It really shouldn't get too much worse. As a wise man once said, buy the effing dip. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is SNAP, Snap. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. I'm Ty. This is Smarter Gambling. See you guys on Monday. Have a great weekend, everybody. Peace out.